Up, everybody? Hope you're well. I thought I would make a quick video on how to read the stock market indices, go over like the very general basics if you're looking to get into investing and you want to start doing some research, what to look at, and some things to think about. So this is KISS Finance. Keep it super simple. Let's get into it. All right, so I use Yahoo Finance. There's probably a lot of other ones you can look at. I know Apple has one on their iPhone that you can look at. But when you go to Yahoo Finance or any other, finance application or whatever that you're going to look at, this is going to be the top thing that they'll have on every single one. So they're going to have the S&P 500. This is the top 500 companies in America, generally speaking. There's a couple other qualifications that you need to that are used to determine which companies are in, but these are basically like the top 500 biggest companies. And it's just like a weighted average. So you can see generally how huge companies are doing in the country. The Dow 30 is 30 monsters. And I actually had this pulled up. So these are the companies that are included in the Dow. So you can see like American Express, Apple, Boeing, Chevron, Coca-Cola, Home Depot, Johnson & Johnson, McDonald's. And so you can also see that they're from a wide variety of different types of backgrounds. There's a couple banks in here. It's obviously a huge part of our economy. But then you have Walmart down here, Walgreens, and then Walt Disney. So you have some, entertainment, some food. Procter & Gamble is they make lots of soaps, like they own like Dove, I believe. So that's what the Dow is. S&P 500, again, 500 of the biggest companies. The NASDAQ is more tech-related companies. So the NASDAQ includes things like Apple, Facebook, Microsoft, and lots of other companies as well. But there's, I think, like 3,000 or so companies in the NASDAQ. The Russell 2000 is smaller companies. So if you want to see how smaller companies are doing in the market, that's a way to look at, how public companies that are smaller, they're still big companies because they're publicly traded. Otherwise, they wouldn't be on the stock exchange. But there are 2,000 of the smaller companies in the market. And generally, the market capitalization of these companies, basically like a market capitalization is like what you're worth. And the way that you get there is you just take a company's stock price multiplied by how many shares they've sold to the general public. When you go to buy a stock, that's one outstanding share. So you just take the price of their stock currently, how many shares they've sold, and that's their market capitalization. And so the Russell 2000 is generally based on companies between like 300 million to like 2 billion, I read. And, the S&P 500 is just all the biggest ones. It'll have here crude oil. That's been a huge one. So if you click on that, you can see, when gas started to spike up with everything that happened with Ukraine recently, you can see how it jacked up, came back down, came back up a little bit, and it's kind of on the decline. So you can look at what crude is at, and that's like the lifeblood of our economy. So that's why it's up here. It goes into everything. So it's a huge indicator. It's important to know. You'll see gold, silver, the euro compared to the US dollar, the 10-year bond, which is very important. GBP. I actually don't know what this is. British pound. So the British pound and how it compares to the US dollar. Let's see what else. The won, the Japan won, or the Japan yen rather. Bitcoin, and then some other like crypto stuff. So if you want to go into and look at a stock, some things you could look at are, well, one is their ticker symbol. So Apple is AAPL, so that's called their ticker symbol. So if someone gives you a ticker symbol, it's just what that stock trades under the New York Stock Exchange. So every company has a ticker symbol. Apple is AAPL, Boeing is BA, Amazon is AMZN, Netflix is NFLX. It usually has to do with the name of their company, so that it's easy to remember. And then, it'll just give you the graph. You can go like 1 day, 5 days, 1 month, depending on what app you're on. Sometimes you won't be able to max out the graph. That's one reason I like Yahoo Finance, is you can max it out. So it'll go all the way back to, I don't know when they initially went public, but you can see once it starts changing. So if it hasn't, yeah, I don't think, or sorry, this is Apple. I was thinking Amazon. Yeah, so you can go all the way back to 11 cents. Now it's up to $170. And then it'll give you the previous close right here, the open, which is what it opened at today. So you can see, you know, on Friday it opened down. Okay, so the previous close was 172, right? Which is like right around here, 172.14. And then when it opened right here, it's telling you it opened at 171.78. And these graphs aren't perfect, so it's like $2 off on the graph, but this is what it opened at. Another thing to look at is the 52-week range, 122 to 182. The market cap, that's how much money the company's worth. So Apple is worth $2.7 trillion, which is bonkers. And if you, again, I use Yahoo Finance, so you could use other things. I'm not too up on them. But one thing I like about Yahoo Finance is that you can come in here, and I'm just starting to get into this. This isn't like financial advice at all, but you can see what's called support lines and resistance. And actually Amazon has them up here, but you can kind of like draw your own. So you come up here, you know, you can do like different things here. You can do like doodle or rectangles, but I just do lines. And you can see kind of like where, you know, you can draw like support lines. So I don't know, just looking at this, you know, there's not a whole lot of support here for Apple, I don't think, because there's nothing really here. Like the last time Apple hit here, it came down, but you can see right here, there's quite a bit of support, right? Like it came up, came down, kind of hit this mark right here, and then jacked up, came down, came up, you know, came down, came back up, came down, came a little bit under, but came back up. So this line right here is kind of like a strong support line. Breaking underneath that is potentially dangerous, but you know, it did it right here. So not to say it can't happen, but you know, this is just a cool way to come in. You can kind of mess around with stuff. And I actually did one the other day, in case you didn't see my other video. I will just do one for Bitcoin, which I guess it's not up there. So I watched a video a couple days ago, and this guy was showing the trends of Bitcoin. And he was explaining, and actually, this is really nice too. I didn't realize Amazon does it, or Yahoo did this, but I drew these lines like 4 days ago, and it actually kept my line, so that's kind of nice. But so this line right here, this was a support line, and you can see, you know, even after coming all the way down, you know, comes back up, you know, and then once it came back up, it hit this kind of support line right here again, and now it's been wavering around in this line. So anyway, that's kind of a long way of saying this is how you look at stocks. It's not too complicated. You can kind of mess around with it yourself and get into it, start to, you know, read different things. Oh, and the last thing I wanted to say is actually, if you go to look up specific stocks like Amazon, the nice thing about Yahoo Finance, and I think most other places do this as well, but if you scroll down, it will give you news articles based on that company, most relevant, up-to-date news stories. So actually, I'm sure if we click in Twitter, probably pull up something about Elon Musk. Yeah. Elon Musk promises to bring even more drama to Twitter board. Elon Musk whirlwind. Twitter reacts to Warner Bros. Fantastic Beasts. Facebook plans to introduce virtual coins. Here's why Twitter is not in, you know. So if you're looking to just learn more about a certain stock, this is actually a good way to do it as well. And it'll bring up lots of different articles from lots of different websites. So this is thestreet.com. This is Barron's. Sorry. The Street, the Motley Fool, the Independent, Bloomberg. So it's just all different articles from all different outlets about that specific stock. So I hope this helps if you're looking to get into stock trading. Actually, this is a good note to leave it on. And this isn't financial advice. I'm not a financial advisor, but this is just a general rule that you might want to think about. If you're just thinking about getting into investing, try and put your emotions aside. Don't get into something and think, oh, I got to get it all now because it's about to jack up. I've made this a mistake myself. It's really easy to think like, oh my gosh, so many things are going to start happening, or you think a company's going to do well, or whatever you think is going to happen. If you're just looking to get into investing, read about what you want to invest in. Don't go crazy. Don't go all emotional. You know, nothing's going to fail or succeed probably tomorrow. So take your time, read up on both sides of whatever stock you're looking to get in on, try and hear the good sides and the bad sides of it, and then make an informed decision. And you can use Yahoo Finance to help you do that. So I hope that video helped. Let me know if you have any questions. Until next time, I'll catch you later. Yeah.